Good morning, Armor Insiders. Welcome to the morning meeting. Thanks for joining me in the virtual hedge fund. I hope you all had a wonderful weekend. Let's dive into our three distinct strategies. We're day trading, we're swing trading, we're investing. We're going to talk about what the market looks like and how it affects our portfolios. Before I dive in, don't forget, virtual hedge fund, you've got your strategy, your risk tolerance, your goals. So whatever I say, it's how I'm running my own personal capital and the capital that I'm managing for others. And the object is for you to take the information, think about it. Hopefully it's thought-provoking, and then execute your strategy. And you've got to be the smart money. Nobody can help you. All right. So let's start with, as I always like to do, start with the big picture of our swing strategies, which drive all of our risk on decisions, risk off. Last week, I shared with you, I am in a risk management mode. I'm not in a taking risk mode. So I'm going to be going over with you between now and the end of the year, my New Year's resolutions, how I want to improve as an investor and a trader. Love to hear your comments. Throw them into the comment section of this video or into the Slack room. And I will perhaps make an even bigger list for me, list for you. And then we can look back and use it as a touchstone while we manage money in 2025. So I've published it for you in the Slack room under Armor Education. You can get it in the captain's note that I sent out this morning. And I'll just, as I increase that list, I'll be adding to it between now and the end of the year. And so I'm going to take one of those New Year's resolutions each day now as we get to the end of the year and share with you how it's going to change the way I trade. So let's, before we get into philosophy, talk about the market in general. And it dovetails with philosophy of how I want to run money and be more effective. So first of all, we use algos to drive entry. So what I want to be doing every time I make an investment is I want to first look at the algo. We use our very aggressive strategy for trading the S&P, SPXL. We use our risk monitor, which is a bigger picture looking at all 10 major index that really drives our massive risk on, risk off. It's designed to identify flows of institutional capital. And when we see those flows coming in, that's when we take our positions because we have the highest probability of success versus the risk we're taking. So today, risk monitor is still green, but let's remember, and I'm going to share with you this chart, the equally weighted S&P. When did the equally weighted S&P, which is a broad look at 500 stocks equally weighted on the S&P, go risk monitor green? This is one of the index. Okay, so this was risk monitor green week. That was election night, the gap up. And then we took most of our risk here after the market corrected, right? So it blew out. We were patient, waited for the pullback to close the gap or challenge the gap. Then we took our positions and we've had a nice run. The weighted S&P looks like this. So here's your Hateful Eight weighting, which is the Magnificent Seven plus Netflix, the Hateful Eight. And we did the same thing here on our S&P position. And what I want to draw your attention to right now, and the title of this discussion today, is Santa versus the hollowing out. Santa versus the hollowing out. What's it going to be? Do we get the Santa rally that everyone's expecting? It always happens, end of the year. It's been a great year. Fed's going to cut rates again this week, theoretically, right? And it'll be more important what they say about going forward for the market. But theoretically, I wouldn't expect the Fed to surprise the market right at the end of the year. So it's going to probably go as normal. And you have this period of time where the market generally moves higher, particularly after a big up year. So you've got Santa rally versus the hollowing out. This is what the Santa rally looks like. And it's being driven by the 8 reindeer, if you'll allow me to continue this, this metaphor. The 8 reindeer that are driving the sled, and that's the Hateful Eight, okay? And so you see in the weighted index, we're trading above every major moving average. The 14-day, 25-day, 50-day standard and exponential, and of course the 200 days down here, standard and exponential. But if you look at equally weighted, you see the hollowing out. What I said to you last week is, if you've ever been to the beach with your kids and you build a sandcastle, you got this wall, and the tide starts coming in, and the kids are hooping and hollering, right? And if you look, you'll start to see the bottom of the wall gets hollowed out. The wall's still standing. Kids are having a great time. Bottom of the wall is getting hollowed out. And then eventually the wall falls over, much to the delight of the children. Okay. Now, this is what's happening in the stock market. The wall's still standing. Everything looks great. And the hateful eight are driving the sled. But this is the hollowing out. We've had 10 negative candles on the equally weighted S&P. Now, I just use the equally weighted. It's a perfect representation of breadth. People love to talk about breadth, and I could go on all day about statistics about how bad the breadth is. All you have to do is look at the equally weighted S&P. 10 negative candles in a row, 7 down days in a row. The Dow's been down 7 days in a row. That's the hollowing out. And so we come right down to not only the uptrend, but the key 50-day moving average on the equally weighted. Does this mean the market has to crash? No, we're in an uptrend. It pulls back from the top of the trend to the bottom of the trend. It's on the 50-day moving average. The Santa rally probably unfolds. What really worries me is the first 2 weeks of January, but we can get to that, in a couple of weeks. I just wanted to share with you where we're at. Risk monitor still green. Market still going higher, breadth getting terrible, equally weighted looks terrible, but it's on the uptrend. So unless it literally breaks down in here, this is actually where you'd be buying stocks for the year-end rally, right? It's come right down to the support. It should bounce. And what I suspect will happen is that bounce. And if it's really going to be a difficult Q1, you're going to make a lower high in this index. So it'll bounce from here, but not make new highs. The S&P weighted will make new highs. You'll get a negative divergence, and then proverbial chickens come home to roost. But we can worry about that later. I just wanted to put that on your mind. And this is why I'm on risk management mode. I'm not on let's add a lot of risk in here. Now let's talk about where I would add risk. I thought we saw last week, particularly in the end of the week, the refocusing, resurgence, what's the word I'm looking for, of the market behavior in the election night trends. And let me show you what I mean. Tesla's just skyrocketing. This is the classic example of election night trends. Tesla's skyrocketing. Of course, we bought it election night, and we're on just an unreal rip, okay? Bitcoin. Over the weekend, it hit 106,000. It's trading right now around 103 maybe 104 it's trading around, okay? Backed off from 106. Just a total rip. In the meantime, anything involved in a tariff war is cratering. This is steel. Anything involved in biotech getting wrecked. Okay, so this was the original sell-off. RFK coming in, who knows what they're going to do, blah, blah, blah. Biotech, pharmaceutical looks terrible. It rallied, crater, rallied. This was the election night crater, rally. Now it's resuming the downtrend. Steel cratered, rallied. Now it's really getting wrecked. Meanwhile, Tesla's up again this morning. So what I think you're seeing into the end of the year is just a refocus on what was working and what is really the election theme. And that puts this stock into the highlighted stock of the day for us. And that has to be MicroStrategy. Okay, what you're looking at right now. First of all, let's just zoom out and look at MicroStrategy. So you have a huge base in MicroStrategy with this perfect pennant and an unreal skyrocket into now another high tight wedge. On Friday, MicroStrategy was added to the NASDAQ 100. We talked about this maybe a week or two ago. There's an upside down pyramid of investing capital. This is true in all regards. So while you may have millions that will invest in micro cap stocks, you have hundreds of millions that will invest in small cap stocks. You have billions that will invest in, mid to large cap stocks. And that keeps getting bigger into the trillions. I mean, it's like goes like this, hundreds of billions, right? So there are rules and regulations. There are compliance officers that don't allow certain pools of capital to invest in smaller cap assets. And so as you walk up that ladder, it becomes a bit of a self-fulfilling prophecy. Just look at the Hateful Eight and you'll understand what I'm talking about. The higher they go, the larger they get, the more access to capital, the more capital comes in. This happens over a long period of time. When it comes to MicroStrategy, being added to the NASDAQ 100 is another key that unlocks another tier of that upside down pyramid of capital. The next step in the process for the MicroStrategy now is to be allowed for the credit default swap market to begin trading CDS on MicroStrategy's bond, which will unlock another massive tier of capital. You see, MicroStrategy, to make this a simple discussion, is allowing tiers of capital that are not allowed to buy Bitcoin from a compliance point of view or whatever. They're allowing that large tier of capital to access the Bitcoin investment through equity and convertible debt. And as they climb up each rung of the upside down pyramid ladder, it becomes a self-fulfilling prophecy. They're able to issue more convertible debt. They're able to buy more Bitcoin. They issue more shares, larger and larger market cap. Now we're in a NASDAQ 100 round. I suspect Bitcoin will trade between 120 and 130 in Q1. I suspect themes that happened on election night to outperform in Q1. That will be crypto, it'll be Tesla, other things that are performing because of election night. And so if I was to take risk, this is where I take risk in a micro strategy. If you want to own a pennant like that, in Mara, if you're looking for this to finally break out, okay, this is a huge pennant. This hasn't happened yet, but they're following in the footsteps of MicroStrategy. In RIOT, they're following in the footsteps of MicroStrategy in Mara, and they now have activist investors coming in to really turn this story on. But as you can see, it hasn't even broken out yet. These are the areas where I would take risk if I want to take risk. And of course, Coinbase is one of my favorites. So I don't have a lot to wrap up this conversation. I don't have interest in taking risk. I raised cash last week in the indexes, my index positions. I still have exposure. Risk monitor is still green. The hollowing out versus the Santa rally, market could still bounce in here. I got some exposure on. I'm concerned about the first couple of weeks of January because of the hollowing out. I want to see what happens when the market bounces into the end of the year. Is it a lower high? Is it more of a divergence? That's usually how market tops are put in. It's not just a sell-off that creates a market top. It's a sell-off and a rally that makes a lower high. And then versus other indexes, you start to get negative divergences. And that's really what sets up the fall. So my eye is on risk management. I'll take risk in a small sliver of the market that is benefiting from election night trends. If I was to be short, I'd go the opposite route. I'd be shorting things like steel, but I'm not shorting right now. I do have my eye on shorting the semiconductors. I may use that as a hedge against the rest of my portfolio. And I've talked about that a lot with you before. So this is the pattern I'm looking at. I would take that hedge off if we close above the 200-day moving average, right? Stay below it, I'm looking to hedge. And just like I'm talking about things, Bitcoin and my expectations of where I think it will go in Q1 or whether or not I'm short, please remember whatever I say when it comes to my expectation, it's married to a stop. If I get stopped out, I have to reassess my expectation. I don't fall in love with my predictions. This isn't about an ego. It's about a goalpost. What do I think the market can do? What do I think an asset can do? If it starts to do that, I benefit from that decision. If it goes the opposite way, I know my thought process is incorrect and I have to reassess. So those are my thoughts for today. I'll be focused on the Bitcoin play. And I'll just wrap up now with some philosophy, as I'm going to do this every day with you at the end of this morning meeting. I want to go over one of the so far 8 New Year's resolutions. Let's just take it from the top. Let's talk about what I like to call focus on the harmony of 3. So this is something I want to focus on as I put money to work from now going forward. I don't have to wait for 2025 to start doing it. I want to focus on the harmony of 3. And we all know what this is. When we put on a new position, when we make a new investment, we want to look at the day trade setup, the swing trade setup. Let me take that back. I want to look at the day trade setup, the daily setup, and the weekly setup. And I want to get all of them aligned because that's the highest probability of success. So when we're taking a new position, and I'll give you just an example of, let's say, Tesla. Okay. When we were taking a new position in Tesla, what we were looking at down here is an ideal weekly entry point. Tesla was breaking out of a major downtrend that had gone back to all the way 2021. So we had the weekly chart pattern set up and it looked, actually, let's go to be interesting here on the O'Neill chart. Let's go look at the weekly setup. So this was a huge weekly base. And what we were looking at was a big bottoming wedge on Tesla. Oops, didn't want that line, right? Big bottoming wedge on Tesla. Then we drilled down. So we know we've got the right weekly chart pattern. Then we drilled down into the daily setup using our algos. And the buy trigger was right in here. This was an island reversal. We talked about that. Then on election night, we got long and it skyrocketed. That's the centerfold, right? That's the pinup. That's the chart pattern we want right there. Weekly bottoming wedge, breaking out. So we know we have strong weekly momentum. Then we get on the daily Armor Algo buy trigger, and then we use day trading techniques to get on the trade. I like to get on a trade sometime during the day, have it close higher, and I go to bed at night already with a cushion of profit. Then you let the position go. So that's one thing I want to make sure I'm focused on as I take new positions. Any new positions that get added to the portfolio, I need the harmony of three to get that going. All right. You all have a wonderful trading session. Armor Report subscribers, you're on your own. You can always throw a question in the comment section. Armor Insiders 9:30. We got our live trading desk started. You got questions. You guys find you're struggling to execute the strategy that you're trying to come up with. I'm here to chat. Happy to be a sounding board. 561-575-6832. Everyone have a great day of trading. And remember, at the end of the day, be the smart money.